Welcome to the deep dive. Today we're tackling SharkNinja.
Yeah, the makers of, all those blenders and vacuums.
Exactly. We're looking at their first quarter 2025 financials. We've got the official release, some analyst reports.
Right.
And the goal is really to figure out if this impressive growth they're showing is, well, built to last.
Yeah. Is this strong start really indicating a sustained path upwards, or are there maybe some underlying things, potential challenges that could slow things down?
Okay, so the big headline grabber right away is revenue, isn't it?
Definitely. Net sales shot up by nearly 15%, 14.7% to be exact.
Hitting $1.22 billion. That's a pretty healthy jump from the $1.07 billion same time last year.
And it even outpaced what the analysts were predicting, which was, I think, around $1.17 billion.
Right, so beating expectations. And what's driving that? Is it just one thing?
Well, that's what's interesting. It seems pretty broad. It wasn't just like one hero product.
Oh, yeah.
All four of their main categories saw increases. Cleaning appliances were up 4.6%. Cooking and beverage appliances up 4.9%. But then you get these big jumps. Food preparation appliances saw a massive 45% surge.
Wow, 45%.
Yeah. And beauty and home environment appliances, also strong, up nearly 26%.
Okay, 45% in food prep. What's the story there? That's huge.
The reports are pointing towards their frozen drink makers and ice cream makers. Seems like people were really buying those early in the year.
Interesting. Home treats.
Yeah, exactly. And for the beauty and home side, it was strong sales for things like fans, air purifiers, plus they launched a new product line successfully.
So it sounds like, good innovation meeting what people actually want to buy.
Seems that way.
And was this just a U.S. thing or?
No, it was pretty global, actually. Domestic sales climbed over 15%,
No.
and international sales were up almost 14%. So strong growth both at home and abroad.
Almost 14% internationally. That's still pretty good.
It is. And it's worth noting that international number was apparently held back a little.
How so?
Well, there was some kind of business transition happening in Mexico. And also, the timing of Easter apparently affected some UK product launches compared to last year.
Ah, okay, so timing issues.
Right. So even with those factors, almost 14% looks pretty robust,
Makes sense. Okay, so the top line, the revenue, looks very strong. Let's shift to profitability then, net income.
Right. So net income did increase. It was up 7.5%, reaching about $118 million.
Which sounds good.
It does on the surface,
Okay.
but this is where you need to kind of look a bit closer.
Okay.
While that standard net income was up, their adjusted net income actually went down by almost 17%.
Okay, 17% down on adjusted.
Yeah, to $123.8 million. And similarly, adjusted EBITDA, another key metric people watch, that also saw a decline, over 13% down, landing at $200.4 million.
So that's quite a difference. Net income up, but these adjusted figures, which often strip out one-off things to give a clearer operational picture, they're down.
Exactly.
What's going on there? What could be driving that difference?
Well, it really points towards pressure on profitability, right? The dip in those adjusted numbers suggests something squeezing margins.
Right.
And the reports do mention slight decreases in both gross margin and adjusted gross margin.
And why was that?
Primarily attributed to the impact of tariffs. That's a big one.
Oh, tariffs. Still a factor.
Oh, yeah. And also, they mentioned lapping a period last year where they had like a full price sell-in of some products in Europe, which boosted margins back then.
The tough comparison from last year, too.
Kind of. They did manage to offset some of it with cost optimization, but clearly not all of it.
Tariffs seem like a constant theme for companies like this. What's the specific situation for SharkNinja right now?
Well, they're definitely feeling the pinch, as you said. The current rates are pretty significant. We're talking 145% on imports from China.
Wow, 145.
Yeah, and 10% from other parts of Southeast Asia. So those costs are baked into their outlook.
But they must be trying to manage that somehow.
Yes, absolutely. They're actively working on strategies, things like making manufacturing more efficient. But the big one is diversifying their supply chain.
Moving production.
Exactly.
Yeah.
Their target is actually to have 90% of their U.S. production happening outside of China by the middle of this year, 2025.
90%. That's a huge shift.
It really is a very proactive move to try and mitigate that tariff risk.
Okay, so that sounds like a smart, though probably complex strategy.
Yeah.
So despite these margin pressures and the tariff situation, the company actually raised its forecast for the full year 2025.
They did, yeah. Which suggests, pretty strong underlying confidence.
What are the new numbers?
Based on this strong Q1, they've upped their expected net sales growth for the whole year, now projecting 11% to 13% growth.
Up from 10 to 12% before.
Right. And they also raised their forecasts for adjusted EBITDA and adjusted net income per share. So they're signaling they expect to keep performing well, even with these headwinds.
That's definitely a positive signal coming from the company itself. But you mentioned analyst reports earlier. What's the take from Wall Street on all this? Is it all positive?
It's a bit more nuanced, actually.
No.
Well, the average price target from analysts, based on the reports we saw, still suggests some upside potential from where the stock was trading.
Okay.
But some analysts have actually trimmed their targets recently, even after these results.
Why? If the results were good and the outlook was raised.
The main concerns seem to be around valuation. Basically, questioning if the stock price, even with the good performance, is maybe a bit too high relative to earnings or future potential.
Ah, the valuation question. So performance is good, but maybe the stock already reflects that or even more.
Something like that. And some mention sort of bearish technical chart patterns for the stock as well. So it's a mix. Good fundamentals, but some market concerns.
Right, so the business is performing, revenue is up, outlook is raised, but the market's maybe a bit cautious about the price tag.
That seems to be the gist of it. The market's always trying to balance current results with future expectations and, the price you pay today.
Okay, let's look beyond just the numbers for a second. What about their overall strategy? What are the key things SharkNinja is focusing on?
Well, their growth plan seems to rest on a few main pillars. First, keep innovating, especially by moving into new product categories.
Okay, new stuff.
Second, grab more market share in the areas where they're already strong, like cleaning and cooking.
Build on the core.
Exactly. And third, keep expanding globally. And that innovation piece seems pretty serious. They're apparently planning to launch 25 new products just this year in 2025.
25? That's a lot of new products.
It is. Shows a real commitment to that R&D and product pipeline as a way to drive growth.
They're definitely not resting on their laurels.
Doesn't seem like it. And then, of course, there's that supply chain management piece we talked about, dealing with tariffs, diversifying suppliers. That's clearly a major strategic focus, too.
Right, managing the risks.
Yeah. And just a couple of other factors to remember when looking at year-over-year numbers. They sold off their Asia-Pacific business last year.
Ah, yes. The APAC divestment.
Right. And that ongoing transition in the Mexico market we mentioned earlier, those things will affect the comparisons.
Got it. Okay, so let's try and wrap this up. If we boil down this deep dive into SharkNinja's first quarter, what are the main takeaways?
Well, on the one hand, you've got really impressive revenue growth. Across the board, pretty much, both products and geography.
Yeah, strong top line, beating expectations, and they've raised their outlook for the whole year. That's clearly positive.
Definitely. And they seem very proactive in tackling the tariff issue with supply chain shifts. Plus, they're pushing hard on innovation with all those new products planned.
But there's always a but, isn't there?
There often is. The flip side is the pressure on profitability. While standard net income is up, those adjusted figures, adjusted net income and adjusted EBITDA, are down. Margins are getting squeezed.
Right. Tariffs and maybe comparison effects are hitting the bottom line, even if the top line is growing.
Exactly. And then you have the analysts, or at least some of them, raising flags about valuation, even with the positive performance.
So the market might be a bit hesitant, worried the stock price got ahead of itself, maybe.
Potentially. It's that classic tension between strong growth and profitability pressures played out against market valuation concerns.
So for you listening, it seems SharkNinja's doing a good job growing the business, finding things people want to buy. That part looks strong.
Mm-hmm.
But keeping that growth profitable in the face of tariffs and maybe rising costs like R&D for all those new products, that's the challenge.
Yeah, that's the balance they need to strike. And how the market values their ability to do that will be key.
The next few quarters will be interesting to watch then.
Hmm.
Can they manage those margin pressures while keeping the growth engine humming?
Absolutely. Their ability to keep innovating effectively and navigate that complex global supply chain, especially with, ongoing economic uncertainties, that's going to be critical for their longer-term success.
Okay, so a final thought maybe for you to chew on. Considering these ambitious growth plans, 25 new products, global expansion, but also the real challenges like tariffs and margin pressure, where do you see the biggest opportunity for SharkNinja going forward? Or maybe, what's the most significant risk you see? Definitely something worth thinking about.
Good question to ponder.
Thanks for taking this deep dive with us today.